Good evening and welcome to the Drive at 5 on IntellectualRadio.com/iHeart radio station. I'm your host, Roman, and we have a great show planned for you today. Please don't forget to stay tuned to IntellectualRadio.com for Warriors Talk with my girl. Golly, I'm drawing a blank. Lady Rochelle, thank you. Man, it's one of those days. I'm telling you, just doing everything. And once you start doing everything, you got to know so many people's names, and then you're just like, "Who are you again?" Yeah, and that's that's basically what happened. Don't forget to watch Lady Rochelle 6 p.m. after the drive at 5. My guest is a life insurance broker, and she is an agency owner. So please introduce yourself.
So, guys, my name is Janice Killingsworth Hardia. I am an independent life insurance agent slash broker under the logistics of PHP Agency. I have been a broker for 5 years. I come from the hospital background setting as an X-ray technologist, and I just simply love educating individuals on how to properly protect their wealth. I'm a mother of four. I have three grandbabies. And the reason I am doing this is to set up generational wealth for my family, my loved ones, as well as educate the community on a proper protection plan that they can take advantage of with the logistics of life insurance.
Okay, when we talked a lot off air,
hmm
and the number one thing is the importance of someone having life insurance. So please tell us, or intellectualradio.com/iHeart radio station audience, the importance of having life insurance.
So, we have traditional thinking, right? When it comes down to life insurance, where traditional thinking is based off of death insurance. But insurance is so much more than death insurance. You can actually protect your mortgage, you can help small business owners. Not only help small business owners, we are retirement specialists. And we all do this through the logistics of life insurance. But the important key factor of knowing how life insurance work is you just don't have to be subject to one way of thinking when it comes down to actually understanding how this tool can be utilized to build wealth.
Is life insurance like an investment?
So no, it's not an investment. When it comes down to the logistics of life insurance is the to protect your life, right? So with protecting your life, you can use this entity while you're living to actually pay some of the things that you need off in the future. So or in the present. So you use this tool to set a foundation to actually help you when times get hard. So the life insurance component is a life insurance first, and then the second part is actually building that cash value that you need for long-term care, income replacement, and certain things like that, or actually to sustain a living.
Give me some examples of,
Okay.
of that.
So one example, right? Say for instance, like myself, I'm going to use me as an example. I have been an x-ray technologist for quite some while, over 20 plus years. And being an x-ray technologist, I suffered, um, well, not suffered, but I basically was injured. Not only injured, I had to take time off of work due to my health, right? And in a perspective of looking at how my income played a key component of living life, I had to exalt my savings to stay afloat because my long term care and my income that I needed to suffice wasn't there because I have to prove a disability, right? So, a lot of individuals, when it comes down to actually understanding how to utilize this tool, you could have what I could have if I had that type of key component factor. I could have used my living benefits to use it while I was down and disabled. So, what that means is while I was down and disabled and I wasn't able to work, I had to exalt my savings to stay afloat. But if I would have had insurance with living benefit key components, I could have used or access that living benefit factor to use while I was down and out. But again, life insurance is that tool factor to actually help you when you need it the most. Because unlike, HR and um, maybe your corporation, they tell you these things, but some people, it just don't click. So what I mean by that is when you sign up for all these benefits like long-term care, disability, short-term disability, you have to prove that disability before you actually get paid out. But life insurance, you can use it liquid, meaning if that entity was there and you had it, you could have simply just call the insurance company, let them know you're disabled, you're down, and you could have access a portion of that death benefit while you still living.
You mentioned liquid benefit. What is liquid benefits?
So liquidity is the money that you can access immediately. So that means that benefit is that okay, so it's three ways that your money can actually perform. And you want that liquid money in case anything happen. And if you don't have that liquid access right then and there, you have to come up with a way with actually sustaining life, if that makes sense. So liquid is just the money that's accessible right now.
You can borrow from the insurance policy and pay it right back. Am I correct or incorrect?
No, you're correct. So with insurance, you have two type of insurance. You have term insurance and you have permanent insurance. So the permanent insurance that you have, it could be whole life, it could be universal life, it can be index universal life. Any insurance component that you have, you are building cash value. A portion of that premium that you're paying monthly goes towards the death benefit, and then the other portion goes towards the cash value that's building inside of the policy. So you can have policies that build 3%, 4%, 6%, all the way up to a 12% interest. As the time go on, as this cash is building up, you can use it when you need it the most. When anything happen, critical, chronic, terminal illness, or when you need that money to sustain a certain type of lifestyle. So that money that is building up is liquid. But what I would like to gear towards these permanent products, it's not used just to, fund it right now and say, oh, tomorrow I need my money. You actually have to fund this product. It gives you the lowest amount of death benefit for you to actually max fund it. So you're max funding so that you can supplement your income, or you can actually use it in retirement, or you can actually build for whatever you choose to build within 10, 20, 30 years, if that makes sense.
Well, let's say I would say probably, let's say 1991, 92, or 93.
Mhm.
Back in the day,
Mhm.
the $10,000 policy was very popular back in the day.
Mhm.
And now the people that was running around and all that stuff got insurance policies still paying for the $10,000.
Mhm.
How they can get that increase, because they've been paying it for decades now.
So, um, that's a great question, Roman. I teach in my community, and I touch and I expound on these topics, right? And one thing that you said basically is that 39% of America is underinsured. So when you come into our office, I'm treating you like a family member. Like you're my aunt, you're my uncle, son, cousin. I just want to help. So instead of placing you in a policy just to have death coverage, we actually do an analysis. And the reason why this analysis is done is because of that statement. We see a lot of our community that's underinsured, that have these low amount insurance policies. Those policies can be 5,000, 10,000, 15,000. So just based off the question that you just said, I ran into a case like that. One of my own business partners, um, her brother passed away. Well, not her brother, but her grandmother's brother passed away, and she wanted me to come sit down and actually review her policy. When I sat down to review her policy, she only had like $8,000 of coverage. And that $8,000, she had been paying like $42 over 37 years. So when you do the math, she have actually outpaid this policy. And this is what we face as agents, because back in the day they will only allow you to have a certain amount of coverage, or they only offered death insurance. And don't get me wrong, I don't blame the agents, because
I
you
do.
well
I do, because if you're approaching me,
mhm
you're an agent.
mhm
I expect you to know your stuff. I expect you to know your stuff.
mhm
You don't sit here and sell me crap
mhm
and you say this covers this covers that, and this covers this. Now there are people out there with only an 8,000 to a $10,000 policy, and caskets, a proper burial, is now close to $20,000, even above $20,000. A funeral, there are making money because a black woman gets shot and killed. A
mhm
black man gets shot and killed. Mainly black men are getting shot and killed. Insurance and funeral business goes hand in hand. There are some funeral parlors that's selling insurance. So my question is, if they don't know, you don't blame the insurance agent. I do, because it's kind of like this. Every single year, life is changing. Just like eggs, it shot up close to $20.
mhm
$20.
mhm
You had Denny's that increased money. You had anything. They were selling selling eggs at the corner store. You get 3 eggs for $5.
mhm
What I'm saying in essence is insurance changing with the time of the knowledge to provide for the people. Because if people say I have life insurance, like you said with your sister,
Mhm.
let's look at the policy, what needs to change, or it's time for you to cash out that insurance policy and go to another one.
So, to basically answer the question at hand, I get that you might blame that agent, but I don't. My agency don't, because most agencies or agents out here are not properly training their people, and we see this all the time. Like when you go on social media, you see all these agents talking about IULs, and then I sit in front of individuals and they want an IUL, which is an index universal life policy, and they can't even afford it.
What does
Because
that mean?
so whenever you are basically um are in the policy, you have exponential growth, but you have a low cost. So that means you have to dump money into this product. It's not structured or built for everyone. If I see that your discretionary or the amount of money is in a negative, or you can't actually fund this type of product, why offer that to you? So again, that come with knowledge. And just go back to what we were saying before, when it comes down to the agent, that's just like back in the day, your parents only could give you what they knew. If agents were out just really doing getting a check, that's all they wanted was income. How yeah, you want to blame somebody, but if
I will still blame the agent. I'm sorry.
yeah,
I will blame the agent. And the reason I gave you my reason why,
uh-huh,
but you come to me.
I know, but everybody don't have those same expertise, or they don't come from that
Well, get it. That's the problem.
But
You
if the
have to get
company
it.
is not giving you that, because again, back in the day, you had you had, what I can say, I don't want to even, where you had laws, Jim Crow laws, that will only allow you to get a certain amount of coverage. So if I work for a company and they only telling me, hey, you only can give me this, then that's probably the only thing that they could have really offered, the
So,
middle class
in
or
essence, you're saying they got some Jim Crow insurance out there.
so I am basically saying back in the day that they will only allow a certain amount of coverage to a certain demographic, period, point blank. You
Certain
or
black people.
the black and brown community. Because again, these are the communities, this are the community that I work with, underprivileged, middle class or poverty. So when you're looking at the policies that they actually have in place, these policies is 5,000, 8,000, 10,000, 15,000. They was only used for barrel coverage. But again, like you said prior to this, you said, is it expounding to nowadays? And it has. But it's the fact that our people don't know it, because you have Miss Smith that's an elder, and she probably like, look, I don't believe in this because someone done me wrong. Or you have Mr. Johnson saying, oh, I had a policy and it wasn't paid out, because they don't understand the terminology. Like there's four type of term policies out.
Give us
You
those four
level
and what that mean.
leveled is a level benefit, mean it's going to be leveled through the duration of whatever you choose. Term insurance only lasts up to 30 years. So if you only have a policy that lasts up to 30 years, then afterwards, yes, it's going to convert. it's going to be renewable, and each year that premium will go up, but it's level for the duration you pick.
Can you cash out?
No, term policies is not built to cash out. It's term. Then you have ROP, which is return of premium. That policy is maintained for you to leverage the insurance company, and in return, they would give you all of your premiums back. And that, again, only lasts 10, 20, 30 years. Then you have annual renewable term. That's increasing every year, annual. So when you look at insurance and you know they only classify it in two ways, health and age, every year that I become unhealthy, my policy will increase. That's with any of them. But the cool thing about term, which is level, it will not change into that duration. So if I pick a 20-year, then after that 20-year, yes, it would change. But annual renewable term changes every year. Then you have decreasing. Decreasing follows your debt, your mortgage. Anything that you have sustainable as you pan into this policy every month, it's decreasing. Your insurance is decreasing in value. So if I have $200,000 and next year I done paid this policy up for a year and my mortgage or my debt up for a year, it's going to decrease in value. So it's going to go from 200 to 175 to 160 to 150. And again, these policies was placed into our community with a lack of understanding. So now you have Mr. Johnson or Miss Smith that's an elderly frowning against insurance companies because again, they're not providing the right tools or the education to actually understand what they ultimately have.
I I'm kind of like, in one way, I want to sympathize.
Mm-hmm.
There's the however component.
Mm-hmm.
The however component is in today's society.
Mm-hmm.
In today's society, I'm thinking I'm covered.
Mm-hmm.
I'm covered. I'm covered.
Mm-hmm.
Okay, when you die,
Mm-hmm.
bills don't go away.
No, they don't.
And you're thinking you have enough coverage to get a proper burial, the repast, and pay off some bills and leave something for the children and grandchildren.
Mm-hmm.
Now it's not like that.
No, it's not. No, it's not. And it's sad to say because insurance agents and brokers should always continue to build a relationship with their clientele. You should always follow up, send cards, send birthday cards or calls. You should do yearly reviews. When you become a client for life. And again, things evolve over time. So if these clients are again just being sold and not understanding what they have, then that lies the problem. So now it's difficult for me, myself, or any upcoming agent that want to do right by individuals to actually go out there and do what's needed for our community because we have one way of thinking. And if you have one way of thinking, again, all we can do the best that we know how is to bring that knowledge and that awareness back to the community and let them know what they have need to be reevaluated to see if we can save it or see if there's other ways that we can actually help them in a time of need or add to what they already currently have. But again, by doing this, this outreach with you, Roman, like again, building this relationship with you and, you know, steady talking to you and running into you, I'm grateful for this opportunity because I'm able to have a voice beyond, just having a conversation with you. Now I'm able to actually pinpoint, what's going on in today's society and in our community, and addressing those concerns. But yes, it's a lot of elderlies that frown against insurance because there wasn't agents properly educating them. And then I can't just take put it on the agents, because some individuals, oh, I just want death insurance, and they sign away, not really understanding what they have. They just want that need right then and there. And then when it's time for them to actually use it, it's not in a good standpoint what they thought they had. So again, it plays on both parts, Roman. It just don't play on one part. Because if I do, as an agent, do my part and sit down with you, again, you do have to do your part and read what you have, right? And in any discrepancy that you have, we have something called a free look period, where you're able to get your money back within that 10-day grace period if you don't like what you see. But again, most of us just, oh, I'm good. I'm okay. That's just like retirement. A lot of individuals right now are suffering because they 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 trust their corporation. They trust what they had was gravy, and now they losing it because they don't understand what 401ks and IRAs and you know 403bs and traditional savings plan TSPs, and they don't understand the logistics of what they have. They just, oh, I'm going to build it, and there's nothing wrong with those things. It's nothing wrong with those things. You
But
should.
there is something wrong with it. And the reason why I'm saying that
Mhm.
is because at the end of the day,
Mhm.
you're dead and gone.
Yes.
ComEd,
Mhm.
mortgage company,
Mhm.
the guy from the rent, they want to know what's going to happen. Are you going to pay the debt? Bills, sometimes credit card bills. Sometimes I want to leave money
Mhm.
for my grandchildren. I
Mhm.
want to leave money for my children. I
Mhm.
want them to be comfortable
Mhm.
at least. You're saying it's difficult for black families to do that now?
So, yes and no. And the reason why, again, I say yes, and I can only talk from what I see and what I have experienced in a time frame that I have worked with PHP agency. li- I only can expound on yes, because I was one of those people. I was one that thought I had everything together, and then I can say no is because I was brought into the sauce. I just said, okay, they say it's good, I'm signing up for it. Not really understanding the logistics of what I had. So I get, that again, our families are suffering, but in order to do something about it, we do something called dime. That's like a financial assessment. We come up with a number, and we work towards that number to properly get you in a place where when you do actually retire or something do happen to you, you will have those funds in place. I can't undo what people have did prior to not meeting me. All I can do is see where they are at and give them a plan in place to move towards their goals. So one of those plans in the starting place is doing this financial assessment, which is a financial need. That financial need will actually that financial need will actually get them to a place where they are at least comfortable, or at least give them a guideline to work towards in the event something happens to their loved ones or themselves. Because again, yes, when you ultimately leave the world, that death benefit is for that beneficiary, but that's not how life insurance is used. You can utilize life insurance while you're living. It's called living benefit rider. It's accelerating that death benefit while you here to use in the event of anything. It can be adult daycare, it can be household expenses, it can be you want to do something holistic. You want to pay your bills up and focus on your health if something happened. That's critical illness, chronic illness, terminal illness, critical illness. Um wait, I'm sorry. Critical, terminal, chronic illness, critical injury, and Alzheimer's. So you're able to access this money in the event you suffer a stroke, renal failure, heart attack, cancer. But again, we don't know about this thing. We don't know about living benefits.
What about diabetes? Diabetes is the leading cause in African Americans and also one of the top fives in African American death, maybe even the top three.
Mhm.
Insurance sometimes say to that person, we know that you're having a hard time. Yes, you did that. We did that policy, but you did it to yourself. You did it to yourself, so we're not going to fund it. You say that.
So,
What to that?
so we do something called risk assessment, right? Um, we as agents, the agents that I work with, we get in front of things. So I want to know transparency, what you're facing. I want to know your AC1 levels. I want to know your medical background because what we do is disclose that up front. And with that assessment, then we have companies like Forrester's Amazing. It's Forrester's Financial. They accept AC1 levels with diabetes patients up to 10 AC1 levels. But again, these companies like Forrester's is not in our surrounding community, so how would you know that? Well, we have companies that will actually work on the better benefit of people that's suffering from diabetic, even though they did make wrong lifestyle choices. But we have those carriers that would help them, even like American National. They are one of our biggest, and they've been around since the 1800s. They will help um, you know, clients that's actually having health conditions and health concerns. But again, they not in our communities. So they hire private agencies like PHP to actually reach the masses in the community.
We talked about diabetes.
Mm-hmm.
What about sexually transmitted diseases? Will that be included when it comes to life insurance? A lot of people, and it's a big increase in our community. When you talk about life insurance, they have to basically say what ails them. Do you have an STD? That's HIV, AIDS, sometimes chlamydia, the list, herpes, the list goes on and on.
Mm-hmm.
As a life insurance broker,
Mm-hmm.
what would you say to those individuals? Because sometimes they just say lie.
Mm-hmm. So,
We're not encouraging lying, but I'm just saying.
yeah, full transparency, no, do not lie, especially not to me. But full transparency, if I'm sitting down with someone that has that type of issue, I'm just gonna be transparent, and yeah, it might be a case where you get approved. It might be a case that you don't. But here's the thing, tell me. And the reason why I want you to tell me is because one of the things that we can do is we do a pyramid. That's when a nurse will actually come out to your home, take certain regimens, and they will also consider those type of cases. But again, how it's viewed is if you lie up front and they find out on the back end, they're not going to insure you, because just like that insurance carrier is looking at you, you looking at them. They want to gain your trust. So come in of the forefront of things and just be honest and transparent with that person, that agent, I mean, or that broker, so that they can help you. And that's the only way we can get get in front of things. But I can't just give you an answer and say, "Oh yeah, they want to approve everyone." I don't know, because again, they have something called Medical Investigation Bureau or LexInexus that's going to actually, once I put that policy in, it's going to check, check everything that they basically said on this application. And if anything come up red, I'm not going to be able to get in front of it. But if you actually help me get in front of it in the beginning, they might consider you.
I want to pick your brain.
Okay.
A lot of people, especially black males, well, let's say the black community,
Okay.
I want to become a rapper.
Mhm.
I want to rap. I know the streets.
Mhm.
I know this and that and the other, right?
Mhm.
Record industries
Mhm.
are putting life insurance
Mhm.
on these rappers.
Yes, they are. Mhm.
Wannabe rappers,
Mhm.
wannabe gang members and rappers.
Mhm.
They're putting life insurance on them,
Mhm.
and they get it to the max because they're a record company. They can afford it, right?
Mhm.
Some way, somehow, and this is what kind of like kind of leak like a slow drip.
Mhm.
Biggie,
Mhm.
Puff Daddy, or P Diddy
Mhm.
put some type of policy
Mhm.
on Biggie Smalls.
Mhm.
We don't know if it's true. It's
Mhm.
alleged.
Mhm.
The mom or Biggie signed whatever was insurance policy.
Mhm.
Dead and gone, the
Mhm.
person who was paying for it
Mhm.
get majority of that money.
Mhm.
But, however, no kin, no relative, no blood sibling.
Mhm.
It's a lot of that that's going on in the black community, especially even rich white people
Mhm.
are just knocking on somebody's door. Let me get an life insurance policy on your son. He's living recklessly. They don't say that,
Mhm.
but they know it's a big time investment and a money investment.
Mhm.
What do you say to that?
So, the first thing I would love to say is non-disclosure. I don't advise anyone to do anything because I'm not an advisor. I am just a broker. I give you options, and you, as a client, provide if that need is for you or your family. That's number one. So you know um, to answer that question, I can't really give advice on that because I don't follow that. But I have read on this topic, and I have read that individuals in certain calibers like NBAs, NFLs, um, um, sports, any type of sports, any type of music, um, artist, rapper, have certain um, certain assets, and they want to protect those assets. Even dancers, I have heard that dancers get, you know, um, insurance on different body parts. And it's all an investment tool because they want to protect their investment. So if they place this certain caliber of amount of money or whatever they choose on you, they want some in return. So that's kind of that. Oh, I do this, I'm going to do this so that I'm securing my wealth, I'm securing my bed. So again, a lot of wealthy people use this entity in the best way, shape, form, and fashion. But it's us, our, minorities, our black and brown communities that don't understand it. But that same entity that they're using is what I'm educating on, which is Index Universal Life. That Index Universal Life give me the capability to place this policy if there's an insurable interest. So the test now, it stands because a lot of individuals was mismanaging life insurance back in the day, and like you say, just knock on your door and I can get a policy out on you and pay this premium, and if something happen I collect. But they changed it where now you have to have an insurable interest, and that insurable interest, oh, Roman is my rapper, I'm his manager, I sign certain content which allow me to protect my asset, and that's what I'm going to do based off whatever stats or whatever caliber of income that I'm going to make or gross off that year. I'm able to get two, three, four times the amount of insurance on him to just protect my asset because I have an insurable interest. So now you have to have an insurable interest in order to actually get that. But that contract that ties me to manage you is that insurable interest because now I'm using my money to help you um be successful. So you're now becoming an asset. It's like a business venture. It's more of a tool to protect my money. So yes, but that same key component, the families can do this. The families can protect their assets. So if I know my grandson, my son is a great baseball player or about to be a rapper, I can protect that asset. I can do that on the back end. So if anything happened, or be knowledgeable about this stuff so that when my son, my brother, my cousin, whoever the case be, become this rapper, become this high caliber of person, I can be knowledgeable about it. So yes, they do that. Yes, they use insurance to protect their assets.
Walk me through. Let's say I come in the door.
Hmm.
Walk me through some of the things that you will sell. Even though we had this long conversation,
Hmm.
you go, you went down the list
Hmm.
of policies and
Hmm.
that people can consider.
Hmm.
Explain to the IntellectualRadio.com family
Hmm.
what they should do if they are reconsidering their policy
Hmm.
or they know a loved one needs a life insurance policy.
So first, just coming into someone home, or they actually coming into my office, which is in Summit, is one S450 Summit in Old Brook Terrace, but Suite 230. But just coming into my office or I come into their home, I have to really, I'm not there to sell them. That's not my goal. I'm strictly leading due to education. And the first and foremost, I want to know why I'm here. I want to know what the need is. So if it's to replace insurance, if it's retirement, if it's protect my mortgage, um, we do executive bonus plans. If it's protect my business, key man policy, business owners. If I want to protect that key, I have to know why I'm there. That's number one. And then I'm going to assess the situation with doing a financial assessment, going over what they monthly expenses are, their business expenses, to see what they can afford. Then, based on what they have and what I'm offering, I'm going to present it, and then they can compare the two and make the decision on what's best for that family or that business. But being honest, just seeing where they are. So the first thing is asking them questions to see why we're here, what they might need to do, what's keeping them up at night, what worries they have, if it's replacing insurance, see what type of insurance they currently have, what we can offer them to see to compare apples and oranges, give them quotes, and then kind of walk away. But we strictly lead by education and education alone. We're not there to take anything. Some people I sit down with, they in great sectors. They did proper planning. If they want to add something, they can. But some clients I walk away. Some clients I can help. Some clients I can't help. Some majority of my audience, it's an income problem. They need it, but they can't afford it, and they don't even understand the logistics of how, like myself. So I added an opportunity. I added PHP to my platform to gain additional income to supplement so that I can have the need to afford what I need to afford for me and my family. But again, it's a lot of key factors on that. So that's like, you know,
No problem. It's over. I see you sweating.
I'm not sweating. I actually like this. I really do. Um, that's just that's just me. I just like it. I like talking about insurance. I
N-
like talking
no
about helping.
problem. We will have you back on. Please give intellectualradio.com/slash iHeart radio station where they can get how they can get in contact with you
Uh-huh.
and everything else.
Okay, so my name is Janice Hardia. I am an insurance agent slash broker. My office is based out of Old Brook Terrace, Illinois. Our address is 1S450 Summit Avenue, Suite 230. Suite 230. And the reason why I say Suite 230 is because we're the number one office. I love exactly what I do. I do have a website. My website is bgcfinance.org. So bgcfinance.org. You can click my website and get a hold of me.
All right. Don't be a stranger to the drive at 5,
Oh,
okay?
I won't. I won't. Thank you
Okay.
so much,
No,
Roman.
no problem. That's going to do it for us on the drive at 5 on the intellectualradio.com/slash iHeart radio station. Guess what? Next Monday, it's the final Monday of March. Can you believe that?
Yes.
Yeah.
Yes,
Guess what?
it's
We
going
will
so fast.
have the one and only Jean Sparrow. You love her. I'm excited. She will be via Zoom, but her promoting her new book, and we get a chance to talk to her. So stay tuned for that. Thanks to Wanda, our executive producer, Earl behind the scenes. You guys have a wonderful week.